Good morning, ladies and gentlemen. My name is Simon Taylor, and welcome to episode 77 of the FinTech Insider Breakfast Show from 11FS. In the show, we bring you the best and brightest from around the FinTech and banking landscape every single weekday, brought straight into your homes at 8:30 a.m. British Summer Time, here live on LinkedIn. Today, I am thrilled to be joined by the one and only Alex Reddish, who is Chief Commercial Officer at Tribe Payments. On this morning's show, we're going to be talking about the evolution of open banking and payments as we enter a new phase of the coronavirus pandemic. So, morning, Alex. How's it going?
I'm good. Yeah, I'm great. How are you?
I'm not too bad, thank you. We were just talking about the British weather being less than great. It seems as soon as lockdown's ending, it's getting worse. But there are some very entertaining pigeons outside my window. So, if I get distracted, you know what it is.
Conversations that bad?
No, it was phenomenal. It's just those pigeons are great.
Yeah.
But as always, pigeons aside, we love getting our audience's questions. So please leave them in the LinkedIn comments. We'll be answering them live. They'll pop up here in my show notes. So we want to make sure we get to all of your questions. But before we get to that, Alex, for those who don't know, can you give us a little bit of an introduction to Tribe Payments?
Yeah, so Tribe's a pretty new payments processor built over the last couple of years and launched June 2019. But ultimately it built to cover issuing and acquiring. So we kind of felt there was an opportunity to sort of reflect the innovation on the front end at the back end. And so we set about building a payments processor, but I guess took the lens of microservices and modular architecture as the way to build it out, which is obviously a couple of cliches for you early doors. But the idea was that if we built a processor on Lego blocks, it would sustain the test of time. So yeah, we cover both sides of the coin, really.
So payments processors, we've covered a little bit on this show, but I guess why microservices, why modular, why is that different to other payments processors?
I think because we wanted to create a sort of disposable mentality. I think there are some very good payments processors in this market. Like, I don't think we can hide away from that. And therefore, actually, you need to build one that evolves with the market. And I think when you enter a market now, which is probably moving quicker than ever and will continue to do so, you need to be able to sustain that pace. And so I think actually it's twofold: is the innovation element, but also then trying to build that stability and security in with it. That's what I'm told by the techies anyway.
Because I think a lot of organizations will tell you they have microservices and they are modular. I guess a little bit of that is sort of, were you born that way, or were you kind of, have you tried to add it on afterwards?
Yeah, and I think that's the beauty of it, right? So being born that way, you can build your entire business strategy, technical strategy, product strategy around it. And I think bolting on multi-geography platforms, it's going to become spaghetti junction quicker, which is obviously a UK reference, but quicker than you might think. So our hope is that, yeah, being born like that allows us to stay like that.
Yeah, well, I mean, if every bit is disposable, every bit can be upgraded without necessarily needing to kind of change the rest of the system. You don't impact everything else if you change one piece.
Yeah, exactly. And I think that, I think most people would start with one product, and we kind of started with 5, and that means that you have to consider that from the outset, because you're overcomplicating your own proposition if you're not careful. So yeah, I think we coined it as disposable tech last year, but the idea is that effectively we just pull it out and we throw a new one in, and hopefully no one knows. So
talk a little bit about who your typical customers are and what those products are.
Yeah, so on the acquiring side, so I think we're about to tell you, so I'll tell you now, I guess, but we've just certified our point of sale solution. So we're going after a more omni-channel like product on the acquiring side. So we've built out a payment application. We've gone for retail e-commerce. And then on the issuing side of our business, we're tending to find a resonation with the likes of the crypto firms, some of the e-gaming products. I think, if I'm honest, because they look at the tech and they're not necessarily worried about how long we've been about. And I think we have to be cognizant of the fact that we're a young business and we're ultimately underpinning someone else's. So you have to be able to prove that. And I think we found that alignment with those that are sort of tech first, rather than, I think, we were talking about it beforehand, but 0.1% of an SLA.
Yeah, well, and see, this is the thing. You don't have 15 years of kind of history of SLAs, and we were talking just before we started about how a lot of companies used to buy payments processing was on the best SLAs in the business, the best uptime, and the best features and for edge cases. And actually, now there's a new type of buyer for payments processing that is a bit more tech sophisticated.
Yeah, exactly. And that's not to say that we wouldn't like to give you good SLAs, right? Like, I'm not going to pretend that we're only tech heavy, but I think I just think there's the opportunity to look tech first. And I think actually, as we get into like fintech 2.0, or whatever we want to call it, the understanding that the tech underneath is vitally important is becoming more prevalent, and therefore it's probably a better opportunity for us to, you look at marketers, and we were talking about some of the investments you see from Sequoia and people like that in the US, and Mark Andreessen. There's definitely an understanding of now what payments processes mean to the ecosystem, and so it gives us an opportunity to shine.
Absolutely, yeah, it really, really does. So, speaking of technology, of course, it probably won't have escaped your attention. We had Joanne Dewar from GPS on yesterday, and there's a bit of news in the recent weeks about all things Wirecard. Has that affected you and the work you do in any way?
Not. We're too young to be sort of drawn into it. I think I've known the guys in Newcastle business Wirecard for a fair amount of time, so I guess I don't think it's massively impacted our business. I think it's too early to say whether the consumer impact will waterfall down in terms of attitude to fintech, and whether these incumbents are now still safer, or where that trust level sits. I think we'll find that out back end of this year, really. I think the one thing I would say, like, as a personal gripe, I suppose, is that, and I think the guys on your podcast a few weeks ago talked about the Soldo team, and sort of saying that those that are using it for sort of betterment of their own product or advertising and stuff like that. Like, I think this is a time when we kind of need to unite. You look at what MasterCard and GPS did over the last couple of weeks, like, it's pretty damn phenomenal. And yeah. I think actually the betterment of fintech is where we all stick together and kind of work together through this, rather than try and pick holes in different people because, someone somewhere else decided to be a bit of an idiot.
Yeah, and that's the consistent story coming out of all of the payments processors and all of the fintechs, and even a lot of their clients, is the fintechs did really well in communication. The folks in Newcastle for Wirecard did really, really well in horrible circumstances, and actually the bad guys appear to be somewhere else and have either been arrested or skipped the country by the looks of the latest reports. One day there'll no doubt be a movie. But on a serious side though, are you sort of seeing major changes in terms of what the client base is asking you, and kind of where the demand in the market is moving, post Wirecard, and where's the broader trend been for people looking to do more on the issuing side, the fintechs, that side? Have there been differences in trends, or is that still sort of accelerating, or has it slowed down a little bit?
I mean, I probably should have done some research on the statistics, but I would say that we're seeing a bigger trend towards principal membership, ownership of their own e-money license. I think that was predicated a bit by valuation bolstering a few years ago, and you tag an EMI license onto your business and you're coming to an extra couple of million. So I think that process started before that. I think this process will accelerate it. I mean, Soldo already had that in place, right? It's just that they expedited the final movement of that. So it's not like that wasn't already coming to the fore. I think what we'll see is individual businesses taking on more headcount and trying to own more of the value chain. And it will be about how we as segments of the financial services or fintech space can enable that while still retaining regulatory control or oversight, and still maintaining a level of comfort in the technical or regulatory services, I guess.
Do you think there are things there for like non-fintech businesses to start getting into that space more, into the payment space more and more? And do you think stuff like this will impact that behavior? Because I mean, we've seen Joanne yesterday was talking about Razor as potential customers, and lots of big techs are looking at the space. And historically, you always had the Air Miles card, and this airline has a card, and so on. But there's something different going on.
I think so. And I think if you think about where fintech has been, I think the last, 12 years has ultimately been unbundling of all of these little microchasms of opportunity. And then actually what we'll see, I think, in terms of the maturity of this market is those coming back together in a kind of best-in-class model. And then if you take what, and I guess we'll get to open banking and stuff like that in a bit, but if you take what that principle is, it's embedding open banking into open finance, into open life. And therefore, actually, then it doesn't matter whether you're a payments company, it's about the data value, and it's about how you kind of incorporate the different facets of financial services into your proposition. And then, we've spent as an industry, spent the last 12 years trying to be not irrelevant, but seamless. And now it's about how you derive value from that payments process, as opposed to just hoping it doesn't bother your customer or give you an additional dropout.
Completely. I think that sort of business case side is often underlooked and misunderstood, and that business case side really changes with open banking, of course, because the type of payment you can choose, the type of options you can offer your clients really broadens a little bit. So talk to me a little bit about what you guys are doing in open banking, and talk to me about the business case for different people in that space.
Yeah, so I think if you take a step back from Tribe a little bit, I think if you look at PSD2 as a principle, it was designed to create more open access and a wider open architecture for the industry. So you think like opening up the RTGS accounts, the Bank of England, like this progression of sort of availability of financial services products to the wider community. And I think in the former years of open banking, it's kind of failed that. The economics, the product requirements, the technical requirements have just kind of not served the little guy. They've kind of just, I think actually it's been a benefit to big tech. And, if you've got huge data sets, then actually open banking becomes really interesting. You can start credit scoring against it. Like there's an immediate use case for that. And I think what we are trying to do, it's a bit of a cliche, but kind of democratize it. Payments processors, and Joe talked about it yesterday, are the epicenter of a lot of these financial products. And so actually we felt like the opportunity for Tribe was with open banking is then delivering that open API structure that would allow our customers to leverage it, irrelevant of the fact that they were only one of 40. So we kind of took ownership of that, and we looked around the market, and we felt like we could build a better product with more autonomous functionality within it. So yeah, I mean, it goes live next month if people keep their arse in gear in our development team.
Exciting times, and if you are the Tribe development team, shout out to you guys.
Yeah.
But I guess that whole open banking space has been something, we did a report with Plaid recently into it. As it's moving into open finance, it potentially becomes something really broad. But it seems like it's been a lot of stick for the banks, like the Plaid acquisition by Visa, Finicity by MasterCard. It seems like value is really moving to the payments players. How do brands retain their value with customers in this space, and what are you seeing best practice really look like for those banking brands and for those businesses that are at the fintech end as well?
I think that from the brand piece, I think no one really cares as a consumer what open banking is. So I think you completely separate the two out. I think actually what you need to do is deliver a better customer experience, and therefore open banking might present you an opportunity to do that. I think if you look at data aggregation, and I'm less bullish on the payment initiation products, I think from a consumer perspective, because I don't think the ROI is there for the consumer yet. But I think if you look at data aggregation, the brand can own their own destiny in that sense. I think it's ultimately coming back to that principle of understanding what a consumer wants, and that's probably, if we look at it, not really changed. It's it's data value and its immediacy and its low cost points, and therefore actually
that makes Sorry, I hit the mute key there for a second. That makes a ton of sense. Listen, the data aggregation and the value thing for the customer is really interesting to watch play out. We saw Revolut, I think, launched their data aggregation, and a number of reports of banks sort of struggling with the additional volume that created on their underlying infrastructure. So sort of the importance of modern infrastructure underneath that becomes more and more critical. But do you think that sort of infrastructure is up to the job of open banking?
I certainly think ours is. I think I would have to say that, right? But I think you talked about this yesterday. I think in terms of 80% of banks' technology budgets being focused on maintenance of existing product, and I think if you look at what banks did in terms of exposing APIs, like it's just crap. Like it's really difficult to work with. They're not really maintaining it. They're using it as a compliance exercise because they were mandated to do it. And I think that's where fintech has always won, is the attitude towards opportunity rather than maintaining a level of compliance. And maybe that's because of the segregation of responsibility. But the honest answer is not today to scale, I don't think. And I think it's the job of us as a collective community to kind of recognize the opportunity and benefit to the end customer, and therefore upcycle our tech or look at other options to enable us to actually deliver on the opportunity.
It's interesting when you look behind the scenes at most banks, they all do more or less the same thing. And they sort of all do it on their own infrastructure in sort of marginally different, but very, very similar ways. And there are specialists out there who do bits of it really, really well. And there's a potential future in which specialists do the bit they're really, really special at. It might be anti-money laundering prevention. It might be sort of everything to do with preventing fraud, or all of these sort of specialist bits and pieces, or even payments as a specialist bit and piece. Yeah. And the organization's value moves towards, is it being a balance sheet player? Is it being a brand player? And there's some really interesting sort of strategy questions that sort of come out of the back of that as you move towards more specialists. I'm going to get us to some audience questions if I can, Alex, because there's some good ones coming through. Dan Feeney asks, Lithuania is catching up to the UK in terms of EMI licenses even. Will Tribe open an office on the continent after Brexit?
We have, I think, 64 developers in Lithuania. Ahead. So yeah, so we have 3 offices. So we have London. We have a very expensive office in the Shard that we're not currently using, which is frustration. We then have Lithuania. We're in Kaunas. I'm looking for developers. I should shout that out. So if any good ones, please do get in touch. And then we have a data center set in Denmark. So I guess not being a regulated entity, it doesn't make as much difference to us. Actually, just being a technical entity allows us to scale quicker geographically and product wise. So we already have 2 to answer that question.
Yeah, it's. I guess it was a business office, and but that sort of makes a ton of sense. So you could look to help out there, and I guess it's sort of different to a Wirecard where you're not doing the bin sponsor piece. So because of that, there may be bin sponsors in Lithuania, for instance, that you would partner with.
Yeah, completely. I mean, we have connectivity into Centralink and stuff like that. I mean, I think is massively relevant, but I think, yeah, we're not certainly in the midterm going to be a regulated entity. I think we've got enough problems with data management and being a processor.
Indeed. And when you give a shout out to Denmark, I could hear producer Tobias in my head. So there's shout out to producer Tobias all the way in Denmark. All right, another question from Daniel Lowther, who asks, what untapped value sits in open banking? So we mentioned a moment ago, account aggregation is sort of well known and out there now and happening, but there's could be other things.
Yeah, that's a difficult question. I think the untapped value. What is the untapped value? I think if you get to where we get to in terms of financial services, I kind of wrote a few notes on this morning, but I think ultimately it will be around delivering a better customer experience. So I talked about it in terms of open data earlier, but if you then marry that, and we kind of covered this slightly, I think, but if you marry that with this open protocol layer, which we were talking about earlier, but in terms of processors, kind of open API architecture, and that ultimately just delivers an embedded finance opportunity for me. And therefore actually open life, if we talk about it like that, is then just the unknown value of data and payments just becoming seamless to the customer. I think actually it's just about just delivering a better customer experience without the customer knowing that they're involved in it.
That sort of finance at the point of need is really, really interesting. I always give the example of Revolut. When you go to another country, sends you the notification saying, hey, have you got some insurance? Click here if you want it. Yeah. That sort of contextual, real-time, intelligent sort of finance at that point of need is kind of the dream. But you need to be able to offer the underlying financial products, and different brands are going to want to do it in different contexts. Maybe that appears in a chat context. Maybe it appears in an accident and emergency context. Maybe it's at the point of sale. So that as you move to different contexts, different brands can do different things with finance if you've got your open finance sort of working right.
Yeah, completely. And I think if we go back to your earlier question around brand recognition, it allows the brand to remain at the forefront, because ultimately it's the brand providing you that convenience or that use case. And the consumer won't care that the underlying product is underwritten by Aviva or whatever that may be. Right? It will be that my Revolut product at my time of need was there for me.
Indeed.
And it's about that sort of synchronous loyalty. I think that's the real value add.
Indeed. A question here from Trevor Hunt. What's the likelihood of the first signs of consolidation or M&A activity in the payment space or the broader fintech space?
So we submitted some stuff to you on this, right? And I think my original opinion a few weeks ago was that investment, and certainly investment, I think M&A will increase, but investment would lower slightly. And I think you look at what Checkout have done, you listen to the rumors about TransferWise, secondary share funding. I think it will continue. I think what M&A will focus on is value add product. I think VC investment will focus on revenue versus customer acquisition. And I think it'll just be that pivot slightly into what is important to a VC or what is important into a geographic acquisition or M&A that might pivot slightly.
Interesting, because we saw, you mentioned Marqeta, who got a significant funding round from some really heavy hitting venture capital firms. SoFi acquired Galileo in what seemed like a relatively differentiated pricing versus Marqeta, but then they're very different businesses. And then, of course, the Synapse, who sort of back at the beginning of the year got, I think, a good chunk of change out of Andreessen Horowitz. So there is still kind of investment in the payment space. And if you look at the payment space kind of market cap over the past decade versus the bank's market cap, there's a real difference there.
Yeah, I think if we look at the first version of fintech, it was front-end innovation, or it was about how you make the UX better and the CX better. And actually, now people are realizing that if you want to make great products, you need great underlying technology underneath. And so I think that's why you see that progression of investment to move further back through the value chain. Ultimately, if we believe we've got a great product, if we then see what's been done historically, imagine what you could do on tech that's 7-10 years newer.
You can get more real time, you can get intelligent, you can get contextual services if that underlying tech is changeable faster and you have specialists involved at the right place.
Yeah, I think contextual is the really important bit, but yeah, I completely agree. Yeah, and I think it's just about delivering a personal experience. The customer doesn't want to be a number anymore. They want to have a personal relationship. But how do you do that in a efficient, automated, smart fashion?
I am not my account number. I'm a human being. I like the sound of that. Question from Dagmar Aldridge says, isn't there a series of unrealized use cases in open banking for an aggregated credit line and deploying something like AI to utilize the best credit terms for different purchases?
Yeah, massively. So we actually work with a third-party credit is in terms of a technical integration to migrate credits onto different products. So if you have revolving credit, installment credit, I think that movement of credit product is vital. I think if you then take it to open banking, understanding your transaction history. I was talking to someone only yesterday actually, and they were saying we can start to verify good and bad debtors by what they're spending their money on. There is a horribly and sadly, I guess, there is a correlation between those that gamble and then those that don't necessarily pay their credit card debt. And so from a business risk perspective, definitely, I think then to take it to the consumer, it's then an education, we can see that you're doing this and you've got these outstanding payments. Like if you look at some of the stuff that Monzo did early doors in terms of incoming direct debits, I mean, direct debit's been a 3-day cycle for forevermore, but someone finally decided to talk to someone about it on day 2. The same principle applies on open banking in terms of upcoming credit payments, or we can see that you're starting to spend a bit more. Have you thought about this? Because we have an obligation to do right by the customer. I think
the power of a notification can go a long way, and I think also the power of sort of what Dagmar's talking about. Dagmar, sorry, apologies. Is that with that data, with that real-time data, if I've gone to make a purchase at the point of sale, maybe I could do that in installments instead of against a revolving credit line. Maybe instead of putting it on my overdraft, this installments at 0%, which is funded by the merchant, might be better for me, but I go somewhere else and that's not available. And that sort of almost selecting what you want at a point in time becomes really powerful if you've got the data.
Yeah, or after the fact. It'd be interesting to see what Curve do with their credit product, right? We'll see.
Oh, now there's a fintech nerd sort of ripple of intrigue that you've left there. Question from Dan Feeney. Can your payment API plug into Tink, Plaid, Salt Edge, all those sorts of folks?
Yeah, it will do. Yeah, so we've got the beta API with our partners for review at the moment, but we're planning to expose it. I think what we've not done is gone through an aggregator to do that. So as part of the commercial structure, we're effectively offering a number of free TPP integrations alongside that. And then we're using, so a great example of the sort of founding partner that we're building it with is they're taking their inflow of payment banks into their current proposition. And then we're building out the connectivity to those to kind of give their users that seamless transition. But yeah, the plan is to do that. I think we will be partner led in terms of where that goes. But, you know, this is day one for us on the product.
And yeah, I guess you're building for maximum reuse throughout all of it. So where do you think payments innovation is heading? Second half of 2020, it's been a massive news year. We've just seen Stripe have launched a bunch of things, including a beautiful new website. But Square, but like, let's just take a moment for how pretty that website is. But Square's valuation is absolutely massive, and this was a company that post IPO, their sort of valuation dipped in half from the last funding round. This is now a business that's, you know, bigger than most of the many banks, nearly the size of it, you know, HSBC. It's twice the size of Barclays. The thing's massive.
Yeah, I mean, I think the disruption is round the corner, and I think the valuations probably reflect where they think that's coming from. I think if you look at fintech today, it's great, but fundamentally economics haven't changed, and the underlying rails haven't changed. But if you think around the likes of Square and the MPOS world and actually delivering value through that, I mean, you've got open banking, open finance, decentralized layers, you know, Novi, you know, whatever happens with Libra and stuff like that. I think people are starting to think that this is the inflex point. So I actually think it's probably slightly longer than H2 this year, but we'll start to see some really cool stuff. I'm going to swear. Sorry, we're going to start to see some really cool stuff coming out in terms of the cross pollination and Web 3.0, and you know, crypto is becoming a conversation that was never going to go away now. So yeah, I don't have a concrete answer, because if I did, I'd have all my savings in those investment bets.
Yeah, well, I mean, that's the exciting part about being in the industry, isn't it? Yeah. We never have all of the answers. Where can people find out more about what you are doing, Alex, and what Tribe's up to?
So LinkedIn, Twitter, and I'll get told off if I don't tell you we relaunched our website for this. So head over to tribepayments.com. Hope it works. It was a pretty late one last night, but yeah, obviously check us out there, and hopefully we can find some time to chat soon.
That sounds like a really, really good plan. Do check out tribepayments.com, folks. And that's the top of the hour. So I'm sure you've all got days to get into. So that's all for today. But David will be back tomorrow. You'll all be very, very grateful to see. So no more of me and no more of my Pepsi Max. But you're going to spotlight show with Asama Shah, who's advisor on the Mayor of London's Equality, Diversity and Inclusion Board, and the CEO of a charity organisation called You Make It. So please check out that show. That's all we have time for today. See you same time, same place tomorrow, and have a great day, everybody. Stay safe. Goodbye.